video, let us see the maintenance of account for more number of assets in one account. Of course, the method of depreciation is straight line method. This is another instance where we are going to see another problem. See, maintenance of accounts for more number of assets in one account. Here there is an example. The furniture account of a company showed opening debt balance of 1,55,000. The cost of that will be 2,50,000. On 1st July 22, a new furniture was purchased for 60,000. On 31st December 22, a portion of that furniture valuing 60,000 being in the beginning of the accounting year was disposed of for 40,000. The original cost of it being 1 lakh. Show the machinery account for the year ending 31st March 2000 by providing depreciation at 10% per annum. So we have to show the accounts for 1 year alone. In that we are given the opening balance in the furniture account. So from that we have to start and we have to do it for the 1 year. Here we have two transactions. One purchase, we bought the new furniture, and also another portion, a portion of the furniture was disposed of, in the sense sold. So these two transactions happened during this year. How we are going to prepare accounts? Now, the depreciation sold for the furniture sold till the date of sales, that is for 9 months. So it is December 31. So from April to December it will be for 9 months. That is 10% for 9 months will be 7,500. And then the book value on the date of sale will be as usual. Opening value 60,000 minus 7,500. We have 52,500 as the book value on the date of sale. So the loss would be 40,000 sale value, but its book value is 52,000. So minus, that is loss of 12,500 is there. Now here are the relevant journal entries. First, see that chronologically we go for journal entry on 1st July. So on 1st July, a new furniture was purchased. So new furniture bought. So this will be our first journal entry. That's 60,000. Furniture account data to bank account. Then next, on 31st December 22. Here we have a sale. Asset is disposed of. So here is a sale. So for sale we have 3 journal entries. One for sales, another for depreciation, another second one for depreciation, and the third one for profit, or here in this case we have a loss. So 3 journal entries as usual. How we had discussed in the previous videos, here the entries are made. Okay, now we will go. See, this is here we have the journal as well as the ledger account. So the first journal entry, the furniture purchased 60,000. So this is entered in the debit side of the furniture account here. Okay, then it is sold for 40,000. So the furniture account is credited with 40,000. There is a depreciation to the extent of 7,500. So that is also credited. Here is a loss of 12,500. Here also furniture account credited with the profit loss account. That is as a loss on sale of furniture. Why we show it in the loss of sale of furniture account instead of showing it as a profit and loss account? Because profit and loss account is prepared only at the end of the financial year, that is on 31st March. Till then, this amount is kept in loss on sale of furniture account for the 12,500. So with these 3 journal entries, we have removed that portion of the furniture, it has been already sold. So this is the status up to this level of journal entry. Now regarding the depreciation for March and the balance, we will take up to the next slide. Here you observe, that is the depreciation on 31st March will be calculated by depreciation on the new furniture plus depreciation on the existing or old furniture. So here depreciation on the new furniture will be, that is the asset was purchased in December, so for 3 months the depreciation will be for only 3 months, so that will be 1500. Now depreciation for existing old asset. What is the existing old asset? Originally we had the balance of 2,50,000. Of that 1 lakh amount was disposed of as given in the problem. So the remaining amount 1,15,000. For that we have to give 10% depreciation. So that would be 15,000. So totaling to 16,500, it will be the depreciation on 31st March 22. Right? Now, see, this is the journal entry. So depreciation account, data to furniture account. So 16,500. The 16,500 is calculated as shown in this workings. Right? Now, what about the closing balance? How the closing balance is? Normally in this account, the closing balance exists represented by the existing asset and new asset. Closing value of the existing asset will be, that is the remaining 1,55,000. Yes, see this 1,55,000 minus 60,000. How? That 60,000 was already disposed of. This is the opening value, this is the sold value. So remaining 95,000 is there. From that 95,000, you have to subtract this 15,000 depreciation. Right? So what would be? It will be 80,000. According to, along with that, the closing value of new asset. So this is about the existing asset and this is about the new asset. How? What will be? It would be 60,000 minus 1,500, 58,500, totaling to 1,38,500 will be the closing balance in the furniture account at the end of this year. So let us see the, once again let us see the complete ledger account. See, up to this level we have seen already in the previous slide. This one and this one we are seeing workings in this page. So this 16,500 we show it as depreciation. We show it as depreciation, and the remaining balance we show it as the balance carried down, and that will be shown in the balance, closing balance, and it will be the opening balance for next financial year. That is calculated as in this second workings. Right? So this is for your understanding. Right? Once again, let's in this type of problem, you have to be careful with reference to the opening balance, then its additions, then sales, then finally depreciation for the on 31st March. This is another thing to be noted. And finally, we have to check the closing balance with our workings. So then only we can assure ourselves that the account is correct. Okay, thank you.